Hi, gold traders. Firstly, a quick tip to help viewers fully benefit from our YouTube channel. Although we do create educational material for gold traders, we are rather keen on also creating and sharing heads up analysis for generating trade ideas. The latter type of video is time sensitive, so we strongly recommend that you subscribe to our free Telegram channel, where you will find relevant updates and further details to accompany those time sensitive videos. Let's go through the forecast in our last video, in which we discussed the market's potential reaction to two upcoming features listed on the economic calendar, namely some opening remarks by U.S. Fed Chair Powell at the Treasury Market Conference in New York on Thursday, the 26th of September, and the following day's U.S. Core PCE. Some traders were surprised that we did not mention the U.S. final GDP and unemployment claims data releases that were going to be released before Powell's remarks on the same day. But as we stated, those data releases, as well as the core PCE on Friday, would be temporary market movers. Powell's remarks, though, had the potential to help figure out where gold was really going to go next if he made mention of certain points. In the aforementioned video, we stated that price would consolidate from market open and then grind lower just before and on Powell's remarks. The extent of that pushdown was going to depend on how forthright Powell was in relation to a key point we thought he might touch upon. But we had 2,634 as a manipulation breach level to end any such pushdown. Note that price did consolidate for a period from market open, whereas the day before we saw a short-lived spike higher during the Asian session that had been a typical pattern of late. Price, however, broke out of consolidation to track higher before the release of the U.S. final GDP and unemployment claims data, which was surprising because we did not expect that to happen. Because of the tricky positioning required by the smart money for such a move prior to Powell's remarks. However surprising that was, it probably had something to do with the fact that Powell's remarks were pre-recorded, but let's not say any more about that. We were not caught off guard, though, in terms of trade execution, because we have levels in place to ensure that we can track and forecast price from level to level. We shared our intraday levels with our VIP members on Market Open, and when price broke one of our levels at 2,666, we had the signal that price would break out of consolidation to push higher. This track higher before the release of the GDP and unemployment claims data was a ploy by the smart money to trap FOMO buyers at the top, which is what happened. On the aforementioned data releases and during Powell's released remarks, price pushed down, as we had forecasted, from the bull trap down to our intraday level at 2,654 for a bounce back up into the primary bull trend. Interestingly, if we measure the move from the bull trap down to our intraday at 2,654, it's approximately the same as a measured move would have been from our forecasted consolidation range down to our 2,634 manipulation breach level. Hence, it appears that we were right in terms of the dollar amount the smart money risk managers were willing to take off the table for that day, but taking it off the table from a higher position clearly meant that they wanted to leave some room to play above 2,634 for both the core PCE data released the following day and Powell's next speaking engagement this Monday. On Friday, a lower than forecast core PCE figure boosted gold temporarily, as we forecast, followed by a bearish rotation back down once the market had digested the data. We shared a trade idea with our VIP members and took a short position for that rotation down that we banked at our intraday level at 2,643, just before price turned away from that level to pull back into the primary bull trend. We will post a screenshot of all the intraday levels mentioned in this video on the free Telegram channel for you to check out. Powell's participation in a discussion along with a Q&A on Monday will take on critical importance because it will be right after the Fed's preferred gauge for inflation, namely the PCE, has come out, and before a number of critical labor-related data releases for that week, which will influence the Fed's plans for the pace. of any future rate cuts before the end of the year. We need to keep an eye on 2,634 to see if Powell's words on Monday shift price toward that level or away from it. If price hits 2,634, we will assess the manipulation play around that level in order to see if it turns out to be a hard floor, signaling a shift back toward 2,700, or whether it breaks below to target 2,600, which would be a great place to bag a long bargain. See you next time.